Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up, and we are now at the end of business on Thursday, December 12th, 2019. We're just approaching 4:15 in the afternoon, and this is where the settlement is. Now, the big event of the day, it depends what you're watching on TV. If you're watching the impeachment inquiry at the Judiciary Committee, you're seeing how everybody's battling. I would not be surprised if they finish up today and go to a vote in the committee tomorrow, and then sometime next week the impeachment vote comes up. And if impeached, then the trial starts in January for the president, and the senators are already saying they don't want to call witnesses. Sounds to me like, as much as some might think it was a stacked deck, and I said some, not me, think it's a stacked deck in the House of Representatives. Some, I'm not going to tell you my own personal views, might think it's a stacked deck going into the Senate, and the president will be exonerated there. I'll let you figure that out. We have to deal with it. The other event, the main one to me, in finance, is that it sounds as though the president has reached, in principle, an agreement with the Chinese on a phase one deal. Now, I was hoping that we'd get at minimum no increase in tariffs, but the word in the financial press is we may see a reduction on some $360 billion of goods by as much as maybe 50% of the current tariffs that are in place. Not to say that the additional tariffs won't go in place then, because there's no reason. So that's a boon to the market, and the stock market lifted on it. I know yesterday when I was on Fox, some of the guys came up afterwards and said, I guess I should have bought calls off of what you're saying. And these were the other analysts on with me. And as I was leaving, I said, you know, today I didn't say much there. And the reason is there's not much to say. I thought this was going to be a bull end to the year, and so far it's good. But it's only December 12th. Anything can happen between now and the end of the year. On Bloomberg today, I was saying pretty much the same thing. So as we look, you can see that the energy markets, that's a bid for them, if you can get this deal, if it is in fact a fait accompli. In the metals, I was surprised to see the gold give up like it did, but okay, it did. And that's probably because the dollar index at first rallied, and you can see most of the currency markets are down. Now, we're not going to know until after I record this what the outcome in the UK is of the Brexit vote. I'll be able to talk about it tomorrow. I don't know anything about it. They really sealed down the news outlets there until the voting is over, so no way to know that. When we come to the S&P, what you can't get away from, this is a new all-time high close. So this has been, as Teddy was saying on with me yesterday on Fox, this has been a Santa Claus year, and he's right. I mean, from 2019, look at how the year's gone. We've had corrections along the way, but market has been strong. Now, the market for the first time has broken out of this pattern, this high to low. Will it be able to follow through? You can see what it's done there. First, what it did is by closing here, it gives you the swing line pointing up, higher lows, higher highs. So until 31.16 is taken out, I have no reason not to expect that the bull market can't continue. In terms of moving averages, you can see where the battleground was yesterday, not today. Yesterday, the market tried to lift away from that, but it was today when it cleared 31.51 that it really put its stamp on it. So now I don't want to see that 31.16 taken out, because that would change the pattern right here. Where's the resistance? Well, you hit it. 31.66, you closed over the upper Bollinger Band, so you're starting to get into that overbought area, and you can see that in the slow stochastics. That does not mean the market isn't up. You had the lower highs, lower lows. Today was the resolution, so those numbers can go away. When we look at the NASDAQ, it was the same. If I took away today's action, you had lower highs, higher lows. The legacy was the higher lows, the way it turns out, but you needed to clear this high. When you cleared it, you went right up to that Bollinger Band resistance, and what I teach is the first challenge normally gets turned back. We'll see if that happens, but I do think those that are long took some money off the table today. The Dow, notice where the market went to. The high was 28,230. 28,257 is the upper band, and you're stalling right there, overbought. But again, you've given the market resolution to the upside. I would say this week's lows are going to be very important. You don't want to take them out. And in the Russell, new high for this whole leg. So let's applaud it. All of them going. hit the Bollinger Band, backed away, but that's what I'd expect. Does not mean the trend is over. And it's pretty interesting. You know, I was wondering yesterday, and I said it, I don't know if the pros were going to play through the weekend and try to get all the way down to the 18-day average. If they wrote calls up here, maybe they were getting out at the 100-day average. Today, the market goes right on down, challenges, gets through. The 18-day average of 1366 hit 1362, comes back to 1419. So I'm satisfied with what I had said, and you can see it's now caught between the 100-day and the 18-day average. But the pros, in my opinion, they're not doing anything at this point. In the T-bond market, I guess the fact that you get USMCA deal, ratified ideally sometime January, February, you get, I'm praying that this phase one gets signed by the president, whatever it is, and that takes some pressure off the market. So interest rates went up about 8 to 10 basis points today, a heck of a move, but not unexpected. Now the question is, you challenged the first Bollinger Band, settled under it, but you can see where the brakes came into the market. Will it be able to extend, or is it going to get caught in the sideways action? For the moment, oversold, trend, lower highs, lower lows, hit a profit objective. I wouldn't be surprised to get a bounce in that. Same thing in the 10-year notes, as you can see, oversold. Now, until you take out today's high, be it tomorrow or Monday, the bears have a number in mind, and they've hit this downside, but I think that they'll be showing up on the breaks, on the rallies, rather, to still be sellers. TLT, down to the lower Bollinger Band, holds on to it, bounces back to 137.45. So I'm going to say what I did before. You hit that Bollinger Band at the first time, especially if you have a little wider trading range, it's often a zone where pros will support. If it's breaking, that's where they're not buying. They might be covering shorts. I never teach that you're going long at that or selling the up part of it unless it's a lost embedded slow stochastic trade or in the VIX. The VIXs I treat a bit differently. In the dollar index, lower highs, lower lows. To me, this is just a bear market rally. I see a lot of resistance at the 97.80 level, the combination of the 18-day average and the 100. What else happened? A bearish crossover today, where the 18-day average got underneath the 100. Now, we have not made a new low from that occurring. I do expect that. We're oversold. You might get more of a bounce here, but I'm seeing some longer-term numbers that are not bullish the dollar. In the euro currency, I'm going to come back to yesterday. Market makes its move, gets up to the 100-day average and the upper Bollinger Band, settles over both. Today, thrown right back down. So that's why I don't think that the bonds and notes have a lot of downside. They might just get a bounce here. That doesn't mean ultimately you can't go towards 2% in the 10-year. I don't know. But what I am telling you is, as a chartist, I'm looking for some pullback. British pound, why be involved in the election? I mean, your guess is as good as anybody's as to who's going to win, let alone who's going to get control in Parliament. The market had an outside day down. It's stepped out of its uptrend that had been in place, and that should not be a surprise. On the opening, you can lose your embedded reading if something goes bad. Let's define bad, that you can't get a majority in Parliament and everything has to go back for another referendum, and it's more of this. Maybe you drop in the pound to the 18-day average. If you take out today's highs, you don't even need me here. That's going to be an idea that the majority was formed and Mr. Johnson probably won. In the Japanese yen, people dump markets that they don't need safe haven for. So you didn't see buying in bonds today, you sold selling. Gold dropped, it's a safe haven currency to a large part, dropped down. Japanese yen, safe haven area. So the market gets to the lower Bollinger Band, and that's where the brakes came into the market. Now this is sideways action. Is it going to be able to build on itself and drop from here is the first thing I'd be asking. Second thing, I don't have a trend. They've got a higher high and lower low, but this is, again, another break to this lower number. Notice you haven't hit an upper Bollinger Band since October. So the market's more prone, this is what it tells me, that it's not looking for safe haven environment as much as people might think. in Bitcoin, an outside day up. And as I've said, I just question now what we've got left here. You've had a lower high, lower low scenario, momentum flat. The trend is down until the market gets back over 77.05. If it rallies, resistance 7,500. And on a big break, the lower Bollinger Band of 6,800 is important. In crude, I'm talking Brent versus WTI, differentials hanging here at the $5 level. It's been there, been doing that. It favors Brent over the WTI, and the Saudis won. If you get my written newsletter, I wrote last night that I expected Saudi Aramco, which closed limit up yesterday on the exchange in Saudi Arabia, to add to those gains. Now, it jumped sharply higher, and then it settled with about half. Didn't go limit up again, or close limit up. Had a big gain, then got to a $2 billion valuation, and from there, the market stalled. And, you know, it's a win for the Saudi royal family, no question. That was what they wanted to see. They got it. Will it stay is a big question. What's the trend? There is none. You got a higher high, lower low. But if you develop this embedded reading with anything, that's the key. So both numbers over 80, both over 80 yesterday, and let's see, the day before. This is Tuesday. This is what I wanted. Both numbers over 80, and today. Until that red line gets back under 80, the bulls have wrestled control. And on pullbacks, you keep your eye on that number. If the number stays over 80, expect to see the pros buying. If it starts falling back under it, be careful. Even though the bias is up, you're not trending. You got to be nervous with that. In WTI, let's take a look at what the slow stochastics are doing. I don't think they're embedding. Both over 80 today, but not yesterday. Just an overbought market in an uptrend. Will it have enough power to reach up to the 60 and a quarter zone? I question that. And the reason I question it is we already heard there's a phase one deal and the market didn't do it. What else does it need? So that's my questioning. And an overbought market may not reach that far. Gasoline market, you have lower highs, lower lows. The settlement 163.50 is under the 18-day average. The bears on the close have control. Until this market takes out the 166.90 level, if they push on this market, are we talking these lower numbers again? That'll be interesting. In terms of demand for gasoline, keep in the back of your mind, the most Americans ever for this holiday period will be on the road. And it's going to be massive amount of traveling. I think they said 104 million families or something will hit the road. That means gasoline, diesel usage, and the like. In nat gas, all that I saw was the market, and I kept saying it, I think it's going to try to fill this gap. It's high 234.10, the gap low, you had to hit 231.30, you did it. Now the question is, because it lost the embedded reading, doesn't want to travel up to the 18-day average. At this point, you have a market that hit its downside target. The trend is down. It's now in a reactionary move and oversold. That's how I define it. Want to remind you that this is going to be the end where you start hearing about my Cyber Week sale. It's over on Sunday and it's not coming back. So if you're interested in my research, this is where you can get it at a solid discount. You buy a 1-year subscription, go to our website, under the word research, you can read about that, and I'm throwing in my charting course. The reason I'm giving the charting course away isn't because of any reason other than if you're subscribing, I really want you to learn what I do, how I teach. I think it's important. And it's 54 videos, about 6 hours of videos. You see what I do with the charting software we give you, you do the same thing. Then, if you subscribe and you get my morning research, what happens is you look at a video and I'm going to review with you the swing lines, the moving averages, Bollinger Bands, slow stochastics, and my window envelopes. And you never see me talk about window envelopes here. Believe me, they're as important as any of those other parts of it. How do you do this? Go to our website. You can also call my staff. I won't bother you with this again. You can click up here and away you go. I'll send out one more email in the morning and I'm done. You have yourself a good day. I'm Ira Epstein and I will see you tomorrow.